So there's a little consumer hit there that I don't think is fully understood yet, fully baked in. That will become a bigger problem, I think, in the next 12 to 18 months as people get that sticker shock.
Hi, my name is Drew Farrell. I'm the Senior Vice President of Symetra in the Retirement Division. And I'm joined by Dave Kansas. We're fortunate to have Dave as a consulting partner to talk about all things financial services, the sector, behavioral finance, marketplace. Dave is a gifted journalist who has a long career in both being an editor with the Wall Street Journal, thestreet.com, and he's actually been commissioned by Dow Jones to write a number of different books on financial literacy. Let's shift gears and talk about real estate a little bit and the impact to the consumer and the overall economy. We can start by talking about, the back to work scenarios and companies. Your hometown Target has rang the bell and said, return to work policies are changing.
Yeah.
That's true of a lot of different major corporations across the country. How does that in any way impact the economy in terms of return to work and call it corporate real estate?
Well, commercial real estate has struggled
Yeah.
pretty seriously since COVID, with more and more people working from home. So we are probably seeing that market bottom out now, with more return to work happening, but it's still under stress. Consumers are under stress because many cities base their tax income on the commercial taxes they can charge the big companies in their city. And as those buildings empty out and people work in different places, more of the burden falls to homeowners, personal, people who own homes as opposed to commercial buildings. So, for instance, most cities are seeing, including Minneapolis and St. Paul, are seeing significant property tax increases to try to accommodate the loss in commercial. So there's a little consumer hit there that I don't think is fully understood yet, fully baked in. I do think as that gets sorted out, that will become a bigger problem, I think, in the next 12 to 18 months as people get that sticker shock.
So you have the sticker shock piece for the consumer. You also have the supply and demand.
Yeah.
And then the third leg of that stool is interest rates are, overall in historical terms, they're pretty normal or levelized, relatively speaking, of course.
Yeah.
But, there was not too far long ago, post-pandemic, where people could get, 2.5%, 3% mortgage. Now that's almost, if not doubled, gone higher than that.
Yeah.
Can you talk a little bit about the three-legged stool I just outlined?
Well, in terms of the real estate and the interest rates, I think residential and commercial both need interest rates to come down to get to the commercial especially. I do think we are kind of bouncing along
Sure.
a little bit about people have been coming in to buy big commercial properties for nickels and dimes on the dollar, but it means they are buying them. They see some prospect for them, what's going to happen. In terms of residential, home sales have been really sluggish based on the data. And a lot of that has to do with what you just articulated, that interest rates feel higher because they're not as low as they were a few years ago. And that makes a big difference on a 30-year mortgage.
You get less of a house than what you were looking at when you were planning to go buy a house.
Exactly. You get less of a house, or the house is just, you can't get a house because it's too expensive.
Sure.
in the long run. So lower interest rates would help unlock that market in a way that'd be very helpful for the economy. It would also unlock more activity, a little bit of the animal spirits that people talk about in the commercial space. And I think if you get those aspects of real estate going, that would be a big boost to the economy and for investors. And I think, again, President Trump, lifelong developer, he's looking at this saying, like, I know this game, I know how it's played, and he really wants those lower interest rates. And you hear more of Wall Street kind of saying, lay off the Fed, President Trump, like I talked about earlier, but we do need lower interest rates.